Good morning. This is Frank with the Morning Quick Shot, brought to you by Trade Stuckers and ninZa Pro Trader Indicators. It's March the 16th, about 7 o'clock in the morning. Got some major economic news this morning. Just wanted to start a little early this morning. We got the consumer price index at 7:30. Housing starts at 7:30. Industrial production at 8:15. Nothing very major there, but we got 9:30 oil inventories and of course FOMC announcement at 1 o'clock Central Standard Time, followed by Fed Chair Yellen's press conference. One more thing you can think about today is that the S&P, SPX failed the 200 moving day average, which was at 2019. So be cautious of that. And if there's any kind of bad news from Yellen, so to speak, and that's just on who interprets it. So there could be some violent swings today. So recommendation is don't trade the FOMC this afternoon. Let it settle out, and let's start back retraining this tomorrow morning. So let's get started. For the next 3 to 5 minutes, I'm going to give you targets to the upside, targets to the downside, and areas of consolidation today. So it looks like we open up around the 206.75 area, somewhere in here. And then pretty much we just traded up to 211.75, real tight range. Hit the pivot points here. We actually traded just through it just a few minutes ago, down to 204 for the low. And now we're right back up. And you can see between the zones and the pivot points, just not much room for it to go overnight. Everybody's patiently waiting, FOMC news today. So be cautious with that. Well, let's start with the downward scenario since we're below the 24-hour VWAP. If we pull back up and we can actually retest this, get right into the VWAP and the moving average median, then we should pull right back down. But we need to cross this pivot. But if we go back and current, it should be a good sign that we'll come down and take this first target down here at 2002. Not much profit there, but it is a good way to get started this morning. Again, wait for another pullback to retest this pivot point, and then we should trade right back through this zone all the way down to the next target at 1995. And may or may not get a pullback here today, but maybe just a few points right back into the top of this zone here, and maybe 1980, 97. And then we should trade right down to this pivot for a little bit of pause. This is the area where we might think about turning around again and bouncing right back up. So be cautious at this point. However, if we could get through this point, expect the retest at the 92 and then down into this zone where we're going to run into the red dash zone here, the pivots, and a zone for support and resistance today. So be cautious with that. That should be more than likely a low today unless we're just really, really bad news from the FOMC. Again, that's a matter of interpretation. If it is a continued on down day, our next target's a 1776, and then we run into all kinds of pivots, and then all the way down to the 60s again. I wouldn't expect it unless the market just goes nuts and we're really moving to the downside into this area. If we can climb, if we hit this bottom, which I don't expect, look for a bounce in here, but you also got to look for the bounce in here. I know that sounds like a couple places to do this, but just be cautious. The main bounce with as long as the market doesn't get really stupid is here. We get down to this area. This is where you probably need to try to go long, let it bleed through into this zone, maybe down into here. And if you're an aggressive counter trend trader, go along from this point and work your way back up and using the zones as targets and wait for little pullbacks to re-enter or add to your positions. As you're moving back up into this area, just above this zone, be cautious of consolidation through this whole zone. So I'd say the area consolidation today, 203.25 to 210, possibly up to the 212 to a top. At the double top here today, along with this DTZ, it's going to be real hard to get through unless the market likes what the news is with Yellen. But if we could get up to here, expect a retest of this zone. By here, I mean if we get to 2014, look for the retest down to 2010, and then we should spring right through this if the market is good. Look for zones here at 216, take some profit up or add to your position as it pulls back, and retest the red dash zone, and then right back up to the next target at 2022. Again, we need to settle. It's going to be a real tuck above the 219 area, 220 area in relation to the SPX. Start watching for those numbers. Keep that in the back of your mind. That's going to be tough. We want to close above that 50-day moving, or that 200 moving day average to help give the market the inspiration, I should say, to continue on up to the next level. up to the 31 level, up to the 40 level. So be cautious up in here. Take your profits at the zones, add your positions outside of the zones, or be aggressive in the middle of the zones. All right. Take one contract off, leave your runners running, or two contracts, or whatever you're trading. 50%. 50% at your targets. Let your runners run. This is Frank. Have a great day.